Hey everyone, welcome to this week's Stockscores Market Minutes. So we've had some weakness in the markets over the last month or so, and I think that has many wondering if we are in the midst of a stock market crash, or is the weakness just a buying opportunity for some of the stocks that have been weak? And I think to answer that question, we have to understand a few things. One, we have to understand how crashes tend to develop, and I'm going to show you that in just a moment. We also have to understand what's actually going on in the market, because when you really look at it, most stocks in the market over the past month have actually been moving up. Even though the indexes have been moving down, the S&P 500 and the NASDAQ 100 have been weak, when you look inside those indexes, many, in fact most of those stocks have been doing well, and the reason the indexes have been falling is because the largest companies in those indexes have dropped. Namely Nvidia, Microsoft, Apple, Google, those sorts of companies. Those stocks really did well over the last 2 years on the artificial intelligence story. So what's going on in the market right now is more of a rotation out of those high-flying large cap stocks and into the smaller cap stocks. And I've talked about that over the last few weeks, and it started when Nvidia topped out on June 20th. And if you go back to my weekly video from June 20th, you'll know that I predicted that Nvidia was going to get weak and that it would likely pull these stocks lower. So the question now is, what's next? Well, let's look at the charts and try to answer that question. So I'm going to jump into the charts here. And this is the S&P 500 chart. But what I want to show you is the 3-year weekly chart. And what you see is that the weakness of the last couple of weeks has come after the market hit a new high. There is not a falling top. And the reason that that is important is because major market sell-offs tend to come after the formation of a falling top, like we had back in 2022. In fact, you could call this a falling top and then a breakdown from a falling top, or this one a falling top. And that's what led to even more weakness. You'll notice that the weakness of the last couple of weeks doesn't actually break the long-term upward trend line. And that means that there's a very good chance that we will see the major market indexes, the S&P and the NASDAQ, actually bounce back in the short term. Now, meanwhile, I was saying earlier that there's still strength in the broader market. So if I pull up the RSP, this is a measure of the stocks in the S&P 500 where each stock has an equal weighting. And there you can see that while the S&P 500 market weighted index has been moving down, the equal weighted index has been moving higher. And that is very important because it shows that there's really just a rotation of money out of those high-flying large cap tech stocks and into the broader market. And that's one reason I don't think we're going to see a major correction. However, I'm going to show you one thing to be concerned about. Let's go back to the NASDAQ chart this time, QQQ. I'm going to make this a 3-year weekly chart. And again, you'll notice that we have not yet broken the long-term upward trend line. But there is this other trend line more like this, where I'm starting at the lows of early 2023, late 2022. And there is a little more downside to that area of support. So here's what might happen with these large cap sectors. We might get a bounce this week, and maybe for a couple of weeks, make a falling top, and then move down towards that longer term upward trend line. There is no sign of that yet, and if you're watching my video each week, I will let you know when that happens, so make sure you're subscribed to the channel and turn your notifications on. If that happens, I will let you know when it starts to happen. For now, I think the market is okay in terms of the long-term correction not being very likely because the trend is still up. So, does that mean there's a buying opportunity in those high-flying stocks? Well, let's take a look at a chart of Nvidia, and I'll show you what you need to see for this stock to likely turn higher. So this is the weakness that we've got in Nvidia, and again, June 20th was the reversal day. You can go back to the video then, and I described then why that was a likely point of reversal. And now we're in this upward trend that is a couple of weeks in the making. What you want to see for this stock to be a buying opportunity is you want it to break the intraday upward trend. So this is a 120-minute chart going back 30 days. If this market can build a rising bottom and break the downward trend line, then I do think there is some potential for NVIDIA to make a little recovery, and perhaps for a trader, there's a buying opportunity there. I'm not convinced that the long-term outlook for NVIDIA, like looking out a couple of months, is great. I think NVIDIA may just stall here for a little while, build a base. That's healthy, but there's probably better places for your money if you're a longer-term investor, because I think the performance was so strong for a long time on NVIDIA that it needs to just settle in and build a base for a little while. Doesn't mean I don't like it, looking out many months or perhaps years, but short term, I think it's just going to sort through the strong gains it's made. All right, let's get into my normal market analysis, and we'll start with the S&P 500. As I said, had some weakness there for the last week or two. It's still long-term relatively healthy, but when you look at that 1 month chart, you see that there is weakness here, and until we can break this downward trend line from a rising bottom on the short-term chart, I think you have to be bearish in the short term, but still bullish in the long term. And that seems odd, but for a trader, you want to be on the bearish side. For a longer-term investor, it's still a bull market. Looking at the NASDAQ, QQQ, you see again the 1 month chart, quite negative, quite oversold, because price fell away from the trend line, and so it's likely to come back to it. But until we build a rising bottom and break that little downward trend line, I'd be fairly cautious in the short term. But the longer term is at a point where it should make a bounce, because it's come back to that weekly upward trend line. Let's take a look at the Russell 2000, that index of small cap stocks, and this is where I think one of the best opportunities is, because we've made this move up. This is called a flag pattern, and now we're breaking to the upside, and that should lead to higher prices for the small cap sector. Looking at the 3-year weekly chart, lots of upside until it hits this long-term resistance way over here. So still good upside. I think look for opportunities in that small cap part of the market. Now let's take a look at the Canadian market. T.XIU is the symbol. And here we can see, like the Russell, it has broken out. It made a little pullback for a couple of weeks, and then on Friday, looking like it's wanting to resume the upward trend line. And here you can see the upward move, the pullback, and then the break of the pullback on Friday. That should lead to higher prices for the Canadian market. Let's take a look at some of the commodities that are so important for the Canadian market. Here's gold, and it's essentially sideways over the last 3 months. Looking at the 1 month chart, it went up, it's pulling back. Watch for gold to break this pullback before you consider it, because right now it's not real healthy, but it does have the benefit of longer term upward momentum. And so we may pull back to that trend line and then resume higher. I think gold looks relatively healthy long term, but a little questionable in the short term. On oil, it's been weak. Here's the intraday chart. The upward trend was broken early in July, and then now it's starting to get steeper. I think oil should be cautious with oil right now. If we look at the 3-year weekly, it's not a bad chart, just long-term building a base. This is an optimistic pattern. We could pull back for another week or two, hit this line, and just do this, and then maybe when the economy starts to improve with lower interest rates, you can see oil rally, but I think it's going to take a little bit of time. Let's take a look at some currencies. Bitcoin is popular, and it's made a good little comeback the last couple of weeks as potential for the Trump administration, with J.D. Vance being fairly pro-cryptocurrency. That has helped that out. But really in the 1 month time frame, it's kind of neutral. 3-year time frame, still got upward momentum, but it's been stuck for a few months. So I think it's a bit of a parking lot for capital right now. US dollar, more or less sideways on the daily chart. And if we go to the 1 month time frame, you can see that we've broken the downward trend line. We're building a rising bottom. If this starts to break out to the upside, then maybe the US dollar rallies a little bit. But for now, it's pretty much neutral for the US dollar. Final chart that I'm going to look at is TLT, which is the bond market chart. And here you can see bottoms are rising. That means optimism is building, and we've got resistance. And if we can break out through that, that will imply that the interest rates are headed lower. The bond market's very good at predicting what the U.S. Central Bank does. Right now, the bond market is predicting a 90% chance that the interest rates will be lowered by 1/4 of a point in September. The chance of a lowering of interest rates at the July 31st meeting, quite small, I guess only around 2 or 3%. So expect it more towards September. Of course, if it was lowered at the July meeting, that would be a real catalyst, I think, for some buyer action in the broader market. All right, so my ratings then. Bearish in the short term for both US large cap and NASDAQ, but still bullish long term. Bullish in both time frames for the small caps and the Canadian market, and really the broader market in general. Short term neutral for gold, but long term bullish. Oil, bearish in the short term, but long term neutral. US dollar neutral. Bitcoin, bullish short term, but neutral long term. This is almost not even bullish, a little bit neutral. And bonds, neutral on both time frames. All right, now let's take a look at the trade of the week. It's a summer market, and that means it's a little bit quieter. So one of the things I've been playing around with is looking for patterns that start building on very abnormal stocks in the pre-market and using those to gauge the entry points. And so a good example of that happened this week. This was BFI, which was a very hot stock. And this is the pre-market, well, this is the extended market session, and the pre-market, the stock was moving down. So even though it looks like it's in a downward trend here, the opening price for this stock on the 30th, no, not the 30th, the Friday, the 26th, it was actually a big gap to the upside, and it ended up, I think it was Thursday actually, it ended up breaking this downward trend line from a rising bottom, just what I was talking about a stock like Nvidia needs to do, break the downward trend line from a rising bottom, and then the stock went on a real tear. That was 100% gain there. And it's just simple stuff. Focusing on alpha, which is stocks trading abnormally. I've got lots of videos on that. Very abnormal volume, strong liquidity, and then looking for that switch from the sellers being in control, which is falling tops, to the buyers being in control, which is rising bottoms. That works really well when you're focused on alpha stocks. And again, these are the kind of topics I cover on videos in this channel, so make sure you're subscribed to the channel. Like this video if you've enjoyed it. It always helps to get more views. And leave a comment. What do you think? Are we headed for more market weakness, or are we going to get a bounce off of that trend line this week? Let me know your thoughts. Hope you've enjoyed this week's video. As always, trade well.